There's nothing to stop you from creating an infinite number of these stablecoins or altcoins, and it's used by traders in crypto who want to park their crypto money into a US dollar surrogate while they maybe move it to another exchange or they do some other investment. I've been in this Bitcoin since 2010, actually, and there are cycles within the whole growth of Bitcoin where you have wave after wave of newcomers coming into the space, and every single time they make the same mistakes. There's no collective wisdom in Bitcoin. Nobody looks at the previous generation and learns from it. They all make the exact same mistakes. So this is just the cycle repeating itself. Bitcoin, it doesn't care. It's going to $1 million, $2 million of Bitcoin. And remember that we need Bitcoin. Bitcoin doesn't need us.
Today, the Federal Reserve cut interest rates by 25 basis points for the first time in 9 months, and crypto holders are watching closely. Major companies, including Michael Saylor's MicroStrategy, continue buying, keeping investor sentiment bullish as we head into the final months of 2025. But Max Keiser issues a stark warning for Bitcoin and crypto holders. The sell-off we're seeing is just the beginning. He predicts a Bitcoin tsunami that could change the crypto landscape forever. Keiser also highlights the looming collapse of the fiat money system and warns of efforts by nation-states and major players, like BlackRock, to gain control over Bitcoin and crypto. The stakes are high, but these developments underscore the urgent need for countries to adopt Bitcoin and integrate it into the global economy before the existing monetary system unravels. With Bitcoin currently trading just over $116,500, up more than $1,100 in the past month, Keiser's insights are a must-watch. In this latest interview, he explains why a massive surge of capital is about to enter the crypto space and what investors should prepare for in the coming month. We're not here for small gains, we're here for life-changing wealth. Crypto is the frontier of the digital revolution, and most people aren't paying attention yet. If you're aiming for massive gains, why wouldn't you do it tax-free? With ITrust Capital, you can buy, sell, and hold over 80 crypto assets inside a tax-sheltered IRA. That means no taxes or capital gains on trades, ever. It's not just about what you invest in, it's how you invest. With ITrust Capital's self-directed IRAs, you can grow your portfolio in the most tax-advantaged way possible. Sign up today with the link and use code DOSE7 for a $100 funding bonus, and start stacking tax-free gains now.
Stablecoins came around in 2012, and it's a digital token that's launched online that calls itself a US dollar surrogate, and it's used by traders in crypto who want to park their crypto money into a US dollar surrogate while they maybe move it to another exchange or they do some other investment. So it's a virtual dollar. And then within a few years, the people who were creating these virtual dollars started to buy US treasuries. The biggest of this is Tether. So Tether is a $142 billion virtual US dollar. It's backed by US treasuries. And you could say identical to the US dollar. So the US dollar is really printed out of thin air, and there's no limit to how many US dollars can be printed. And people use it as currency, as a medium of exchange. And of course, when you print too many of those, it can cause a lot of inflation. A virtual dollar or a stable coin is printed by private companies, not a government, but a private company just prints an unlimited number of digital tokens that they call US dollar surrogates. And they buy US treasuries to quote unquote back their tokens. But of course, those treasuries are also printed out of thin air. So it's thin air backed by thin air, you could say, when you compare it to something like Bitcoin. Now, let's talk about a central bank digital currency. This is something different, and you see this happening in Europe. You see the leaders in Europe are really keen to launch a CBDC, as they are in Asia, as they are in China. And they want to absolutely control the monetary system so that every transaction is monitored centrally by a central authority. And they have the ability to censor any transaction and to introduce credit scores or social credit scores if you demerit, and this would impact your social credit score and therefore access to these digital dollars. So central bank digital currencies are definitely centralized surveillance financial technology. Stable coins are also centralized. They are not necessarily in the same catalog as a CBDC. People in the global south, for example, who have no bank account at all or no access to US dollars at all, they can, on their phone with an app, essentially trade with US dollars with other people around the world who want to just trade with US dollars because it's the most common currency denominator in the world. People are very familiar with dollars. So there is an application for stablecoins. They have a practical role in countries and populations that have no access to bank accounts and certainly no access to US dollars. And then, of course, there's the US dollar itself, which is really a virtual currency. There's nothing really backs the US dollar. Banks don't have any reserves in a fractional reserve banking system as you have in the United States. Banks have no money in the bank. When someone comes to the bank to borrow money, the bank simply hits a button and creates $500,000 or $1 million worth of dollars out of nothing. There's no money in the bank. They just create it on the spot to create that loan, and then they're making money on the interest on that loan. They immediately put it into the global derivatives market and try to eke out a small percent gain on trillions of dollars to create cash flow for themselves, but there's no actual there. They ostensibly have a minimum reserve requirement as defined by, I think, Basel III. So I think it's less than 3%. But if you actually did an accounting of the books of a major bank like Citibank or JP Morgan or Bank of America, you would find that they have no actual tangible assets or reserves at all. It's negative reserves. They have a negative book value. They do what's called mark to market, not mark to market, but mark to model accounting. So when the regulators go in and say, well, show us your books and show us that you have this money, that what they show them is a model of what would be money if in fact these conditions according to the model existed. It's a theoretical model. But if you were to say, well, show us the actual cash on the balance sheet, they would be unable to do that. It's mark to model, not mark to market. So it's all huge accounting fraud. Remember during the 2008 scandal, Lehman Brothers was caught doing the Lehman shuffle. It was accounting fraud 105, I think it was called, where when the regulators came in to audit the books, they took all the debts, they stuck it into this account, then the regulators would look at that account, and they stick the debts back in the original account. They play this enormous three-card Monte game with their debts. They collude with each other. All the banks help each other, Lehman or JP Morgan or Goldman Sachs. They all share each other's liabilities one step ahead of the regulators in this massive shell game. I worked on Wall Street for many years, so I have personal experience from how this is done and having participated in these schemes myself for many years.
With unwavering confidence in the crypto space, Keiser predicts that the next major market shakeup is on the horizon, one that BlackRock and other crypto giants are preparing for. Despite this, he assures investors that a long-anticipated surge is coming, with Bitcoin's price expected to rise exponentially in the second half of 2025.
So there is no actual money there, and that's why the deficits are 35, 36, 37 trillion dollars, because at the end of the day, they just keep printing more money, and that creates a greater drag on the economy and the interest on that money. Of course, the interest on America's debt is the single biggest item on the budget in the United States. It's bigger than the military now, and it's growing. It's growing a lot. And you'd have the Elon Musk is over there in Washington with Howard Lutnick, who I know very well from Wall Street. They're trying to find fraud and waste to cut the deficit. They believe they can find $2 trillion in waste, but it's a $36 trillion problem. So it does, and the bond market's telling us that they won't be successful anytime soon. That's why interest rates continue to creep higher, because of the problem of having runaway debt. And the US economy and the global economy goes into what's called a debt spiral, where no matter what you do, you can't pay the interest on the debt. So it begins to feed on itself. You can't even afford to pay the interest on the debt at some point. If you tax the United States 100% of every dollar every American made, it still wouldn't be enough to pay the interest on the debt, much less the debt. So that's kind of what we're in, the situation that's going on now. So to get back to the original question, you have the US dollar is kind of the mother of all Ponzi schemes. It's a fraudulent, digital, non-existent paper. And then you have a stable coin, which references a US dollar, but it's not an actual US dollar. And it's backed by treasury bills in many cases, which are also non-existent. And then you have the CBDC, the central bank digital currency, which is actually an authoritarian, totalitarian instrument of surveillance. That is actually extremely troubling and should be avoided at all costs, but it's becoming quite big in Europe. It's becoming big in the United Kingdom, and of course it's already big in China. And it's the next step in this dystopian, centralized globalist nightmare where people have lost all sense of individual sovereignty and are just enslaved by the debt pushers. The bottom line is that money will be rationed. So it doesn't really matter what your job is, because all jobs will be disintermediated out of existence with artificial intelligence anyway. So everyone will be awarded the state, and everyone will have to get their monthly ration of money from the state. And if you're a good person and you don't insult the state, you get a bigger slice of the fictitious paper money. If you're a bad person, then they starve you to death. So it's a way to run a debt plantation. It's because, Jimmy, over the past 30 years, the ability to do this, because the cost of the three primary costs of technology are storage, processing, and transmission over the internet, transportation, the distribution of the information. So all three components of technology are all crashing in price towards zero, right? The cost of storing digits and calculating digits and processing it, it's all going down to zero. So the cost of creating this dystopian imprisoned state of centralized central bank digital currency has become within the reach of a bad actor, a state that is not interested in human rights. They just want to control their population. So that's why we're seeing this now, because the cost of doing it has become affordable for a state to run a dystopian central bank digital currency nightmare, as we're seeing unroll now. So of course, they will continue to go down this path because it's profitable for them. And this is the trend that's happening. Well, in the United States, there's definitely going to be a bigger pushback than in anywhere else in the world. In Asia, there's already a fait accompli. In Europe, they're struggling now. They will probably fall to the European Central Bank. In the US, though, there is a genuine fight going on. And I'm hopeful that the US, particularly if they embrace Bitcoin, will put the end to the central bank digital currency nightmare. As Christine Lagarde over in Europe has said, Bitcoin represents an escape hatch. Well, what does that mean? Because Bitcoin is not centralized, because Bitcoin is impossible to control, because Bitcoin you can't censor it. It's unconfiscatable. So it's the state's worst nightmare. And in the US now, everyone in Washington is talking about building a Bitcoin strategic reserve, leading the world. We had the first strategic Bitcoin reserve. President Bukele is pursuing pro-Bitcoin policies. And this has really been the model for the world to follow. And Trump and President Bukele are good friends. I just read online that President Bukele will be visiting President Trump in Washington soon. So there's a very strong alliance there, and predicated on, in my view, a very strong understanding of what Bitcoin is and what the potential is and who the bad guys are. The bad guys are the central money printers, the central banks. Those are the bad guys.
The Bank of Japan, long a key player in global currency markets, teeters on the edge of default, a scenario that could trigger a worldwide economic downturn. Max Keiser warns of an impending catastrophe driven by collapsing fiat systems, runaway inflation, and bank failures. He suggests that a transition to a Bitcoin standard may be approaching as the world grapples with this crisis. Keiser criticizes central banks, including the Federal Reserve, for hollow promises that have fueled excessive money printing and poor investment. Following the